All right, we're taking a look at the price of oil. Crude above $90 a barrel. It's seeing its biggest surge in 4 years, largely due to the Strait of Hormuz, which is effectively closed, backing up supplies of crude oil and other energy-related products. Treasury's weighing direct intervention in oil futures markets to cool prices. Here's the president just yesterday talking about what's already being done to reduce pressure on oil.
My administration announced decisive action to help keep down the oil prices, including offering political risk insurance for tankers transiting into the Gulf, as you know, pretty dangerous territory. Further action to reduce pressure on oil is imminent, and the oil seems to have pretty much stabilized. We had it very low, but I had to take this little detour. In the long term, the actions we're taking will dramatically increase the stability of the region and oil prices and stock markets and everything else.
All right, Gary, $90 a barrel in West Texas. Is that sound reasonable? What do you make of that number, Gary?
For the whole year, I would be able to go on my radio show and say, boy, the stock market's performing because oil prices have been just trending down and interest rates have been trending down. And now you get one of the biggest spikes we have ever seen in history in a short period of time. Of course, the market's going to react. The transports that were acting fabulously, they're getting trashed now. Airlines, cruise lines, anything travel. And I suspect the longer it stays up, the worse it's going to be. I think what you have is a combination of A, the event, but B, I think investors, traders, and speculators the whole year is just so calm that, and then when things went out of whack, they have to adjust, and boy, oh boy, this is one of the biggest adjustments ever, and where it stops, I don't know. And, you know, I know they're going to try and do something. I hope they don't too much. I think the only thing that's going to get things down is kick their you-know-whats, and get this thing over and done with, because I'm amazed we're at $90. I cannot believe how quickly and how far it's gone.
Jackie, it's not your oh-no price of $100, but it is getting closer to that.
We moved closer to that one day than I thought that we would.
And can I throw something out there? This I think matters. It caught my eye. The energy minister from Qatar came out and said, you know, if this Iran conflict continues, and he wasn't giving like firm deadlines, but he put a number out there. He put $150 a barrel. And I think this market looked at that guy, knowing what he knows, saying 150, and that pushed up.
Is he auditioning for a job at Goldman Sachs
well,
for that number?
Look,
sounds like.
Okay, Jackie, I'll get your thoughts on it first. What do you think?
Okay, so as I said, I wasn't expecting this kind of move today, in one day specifically. Gary, I agree with you on one hand that prices are higher than I thought they would be by this point, but I still feel that they're relatively contained for what they could be given the chaos in the Middle East right now. What it says to me, it shows the urgency with which the president wanted to act. We know this is a president that is always watching the markets, bond yields, oil prices. We know that one of his biggest issues right now here at home is combating inflation, affordability, how people feel. The price at the pump is very important to him. And that is why he's worked so hard with big oil and with his cabinet officials to implement policies that would bring oil prices down. And people were just starting to get relief and starting to feel that. So it leads me to believe that the decision point that he made in his head was, this is more important right now. I'll take the short-term hit on oil and gas prices. If we execute properly, it will be a short-term hit and not something that is going to even potentially, you know, upset the apple cart going into the midterms. But these are all the calculations and things that he thinks about. You've got a lot of Democrats out there saying, why was he doing this? Why now? There was no threat. I believe that we had intelligence that spoke to us and let us know that there was an imminent threat and that this had to be done now. I'm not saying that's not going to hurt for consumers. I haven't been saying that. Right. Do I think we get to $150? No. Do I think we get to $125, which we did during Russia-Ukraine when our supplies were much lower? No. So let's just see how this goes.
Dagan, I wasn't thinking Goldman Sachs with this Qatar energy minister, but I was thinking a phone call to Qatar saying, can you get that guy away from a microphone, please? I don't think he needs to be weighing in. It's definitely not helping if your goal is to calm energy markets. But you and I talked to Phil Flynn last night about some of these other ideas the administration's considering intervening in futures markets. I think the way Phil explained it is you'd sell futures and then you'd be able to fulfill those maybe with SPR. You give me one of those little half smiles. What do you think?
This is based on reports. We have not heard this directly from anyone on the record from the Trump administration. But that's my half smile, which is rare, because Treasury Secretary Bessent and Secretary Wright and Secretary Burgum. Secretary Bessent comes out of the investment world. He comes out of the buy side. He ran a hedge fund for many, many years. And if there is anyone who understands how the world works and can put all of the pieces together and act in the best interest of America and Americans, it's those three individuals, including Secretary Bessent. So if there's something that is doable and manageable through futures contracts,
What could you do?
You actually would sell futures contracts into the market to drive down the price of oil futures, potentially. I don't know if that's what they do. One thing that jumped out at me, Secretary Chris Wright, Energy, was on Fox and Friends earlier, and Lawrence Jones asked him, when are you going to, you're talking about military escorts of tankers through the Strait of Hormuz, and Secretary Wright said, the full focus of our military assets is Iran, to suppress Iran's ability to wreak havoc and cause trouble for its neighbors. We must get Iran's ability to cause trouble way down. As soon as it's reasonable to do it, we will escort ships through the strait. So that was we don't know when that's happening. And he also pointed out that, but in terms of understanding the way the world works and why what's happening over there, we have to deal with oil moving in and out of the Persian Gulf. Russian tankers have been given permission by the Treasury Department to unload oil into Indian refineries. Why is that, Secretary Wright? Because these are floating barrels that we need to get, they're on the market. We need to get them into the closest refineries. This is temporary and not a change in policy. But again, it's to keep the oil and product moving, because all of this, we are not in for a supply shock here in the United States, but we're in for a price shock. Right now, where oil is trading, we are in store for $3.50 a gallon up to $3.90 a gallon in the United States. And we've already moved 34 cents a gallon in a week nationwide average. So, but this price shock, because it's so quick and instantaneous, it's actually it's a demand destroyer. People will drive less rather than it being inflationary. Right. That's in the two horrible choices, that's the better one.
So on that note,
seasonally speaking, they will drive less, because we were just talking about the terrible weather. Like if it was July 4th, I'd say maybe they would continue to drive, but I agree with you on that.
So on that note, Kuwait this morning said they're cutting production because their storage facilities are getting full. So until you start to get big movement in that strait, you're going to have these big oil producing countries are going to basically, they said, we're going to focus and just produce domestic consumption. We're not going to be worried about the world. Kuwait comes out with that headline and we go up to 90 almost immediately. Two quick points. One, not the level of 90 that scares me, the rate at which we got there. In 2 months, we've jumped 64%. I don't care about 90. I care that 2 months ago we were at 55 and now we're at 90. Gary, quick question for you. We are an oil exporter, so we're like the petrocurrency, right? So dollar strengthens relative to other currencies when the price of oil goes up, traditionally. Is that a good thing? How do we think about the value of our currency with oil rising right now, given that we're an exporter, and maybe the impact on equities?
Well, all I can tell you is when we're at war, it seems like the dollar gets strong, and usually commodities should come down because of that. But we have something extraneous going on right now that totally puts that to the side. And I just have to say it again. You mentioned Kuwait. There are other factors also going on that are pushing oil prices up, other different countries. Until this ends, it's going to be rough going. If we get to a point where overnight we hear some sort of cease, oil's down $15 overnight. It's just going to go like that. I really do believe at this point we have to get to that point, because otherwise, just remember, it's not just how much oil's out there, it's the belief of the shape of things to come. Perception is a lot when it comes to the price of commodities, both up and down.
All right, we got to leave it there. Coming up, you asked and we're answering. Our Friday segment, Ask Us Anything, is coming up in the next hour. But first, a huge move for Maha. RFK Jr. changing the way doctors study nutrition. Next.